Hello and welcome to NDTV Profit. Our guest today is Stuart Gulliver, recently taken over as the Global CEO of HSBC. We had a chance to speak to him when he was still heading the Global Banking and Markets Division. Today it's a pleasure to speak to him in his new role. Sir,
thank you.
An absolute pleasure and heartiest congratulations.
Thank you very much indeed. No, it's great to be back here as well, so thank you.
Let me start by asking you took over in January. It's been quite a ride already,
yes,
I suppose. Lots of events, and I'll talk to you about those events. But from your perspective, as you took over and as these 3 odd months have gone by, what's been the priority? How have you started tackling the new job?
Well, there's essentially, I think there's 2 streams that are working in parallel. So I take over a firm that's incredibly strong, where I myself have spent 31 years of my working life. So the strategic direction of the firm is not going to change dramatically. But this is a bank that made $19 billion of profit before tax last year, almost double the previous year, and one that one would assume is in a world that's emerging from its most powerful parts of its financial crisis into a recovery period. But actually an institution that's also regarded as what's called a global SIFI, a global systemically significant financial institution, so one where the amount of capital we'll have to hold will be higher. So my challenge actually as the Group CEO is very much to look at how we can drive our return on equity, our dividend payout ratio, and our cost efficiency ratio in a new paradigm for global international banks. So post the financial crisis, the regulators would expect a bank of our size and scale to hold more equity. So I need to make sure that we can drive our ROE, our dividend payout ratio, and clearly our cost efficiency ratio, from which the other 2 are outputs, to a level where investors want to invest in our stock. And the reason I say that is HSBC had performed strongly during the financial crisis. We did better than many other banks. We took no equity and debt from any government anywhere in the world. But the challenge as we emerge from that financial crisis is to create a reason for HSBC to be a winner in peacetime as opposed to being a safe haven only in crisis. And to do that, I need to focus heavily on some of the financial levers that exist within the firm. So we will be reviewing a number of the businesses that we're in to see where we can drive and invest in those that are going to offer us very high ROEs, as low a cost efficiency ratio we can get, so that we can in due course increase our dividend. Because I also think that bank stocks, and this is not true necessarily here in India, but bank stocks globally will go back to being the way they used to be in the 1980s, 1990s, which is you hold a bank stock as part of your portfolio because it's defensive. So it offers you a very good dividend yield and a reasonable ROE, but its ROE is 12 to 15%, its capital growth is modest, but it pays you a 5–6% dividend yield. So I think a lot of what will define total shareholder return for a bank will be about dividend. So as I say, I need to focus on ROE, the cost efficiency ratio and the dividend, rather than changing the strategic shape of the firm, because I actually believe the countries we're in, the 87 countries we're in, and particularly the 5 customer groups that we're in, offer us enormous diversification and therefore enormous financial strength. And I don't want to change that, either the mix of business or necessarily the geographic footprint. We also have done a piece of research that we released actually in January, where we looked at what the 30 biggest economies in the world would be by 2050. And of them, 19 are what we currently call emerging markets. And of course, we're beautifully positioned in those emerging markets. So I think HSBC's geographic footprint sits in basically where the world's marginal GDP growth will be for the next 25 years. So we've got the right geography, we've got the right customer group. What we need to do is drive a bit more efficiency out of the firm. Now, of course, whilst I've been focused on that in my first 90 days, as you remarked, we've also had in very short order Tunisia, Egypt, an earthquake in New Zealand, the troubles at the moment in Bahrain, and an earthquake in Japan. So there has been a series of external exogenous events taking place also within the first sort of 70 days of sitting in the seat. But again, to be clear, I've spent 31 years of my life working for the firm, so it's not that I'm a newcomer to the firm.
Absolutely.
NDTV's Cricket app, Android and iPhone, fastest scorecard, special analysis, and much more. Download free. ndtv.com/apps.